Hello, we're going to talk about the taxability of graduate level tuition and service fee waivers. This video explicitly relates to University of Illinois system students. Each university across the country may handle withholding for taxable benefits like graduate level tuition and service fee waivers differently. So please keep that in mind if you transfer to a different institution or coming from another institution to the University of Illinois. Additionally, I'd like to note that it is against university policy to provide financial advice. So the information shared in this video is for informative purposes only and does not constitute financial advice. Please consult a tax professional for questions regarding your individual tax situation. Many graduate students are surprised to see how their take-home pay or net pay is affected by the taxability of their tuition and service fee waivers. Federal and state laws require employers to withhold taxes from employees' taxable income on behalf of the IRS and state or local agencies. For obvious reasons, the responsibility of the employer to take taxes out of an employee's taxable income and benefits is called withholding. Understanding some basic terms as it relates to your paycheck is helpful for understanding how withholding impacts your take-home pay. Gross pay is what you're paid before any tax withholding or other deductions are taken out. Some benefits like bonuses, or in this case, graduate level tuition and service fee waivers, are considered taxable income by the IRS and are added to your paycheck prior to any tax withholding or other deductions being removed. What's left is your net pay or take-home pay. The taxes that are withheld from your pay differs depending on a variety of factors, but particularly by the employment category you fall within. Federal and state taxes and some FICA taxes, specifically Medicare, are taken out of an employee's pay. If you are a student employee on campus that's enrolled at least part-time, no FICA taxes are withheld. However, if you're enrolled less than part-time, FICA taxes are withheld from your pay. If you have a fellowship, it is not considered employment, so no withholding occurs on either your monthly stipend or your waivers. However, if you're a foreign national, it could all depend on your residency status, tax treaties, and visa type. Here's an example of what your earnings statement may look like. It includes both your taxable and non-taxable gross pay, any previous gross pay you have received, deductions like tax withholding or union dues, as well as your net pay. You may have opted into other deductions like contributing to a retirement plan, or if you're a full-time employee, other benefits that would be listed here on your earnings statement. The way you complete your W-4 form determines how much federal and state taxes are withheld. Your tax year is based on the calendar year, not the academic year. This is often challenging for students to remember when it comes to tax planning. Your W-2 shows the wages and withholdings for the calendar year that is reported to the IRS and state or local tax agencies. And you use your W-2 to file taxes. Withholding is an estimate of your tax liability. So when you go to file your taxes, you calculate your actual tax liability. Tax withholding is the responsibility of your employer, while tax liability is your responsibility as a taxpayer. Regardless of what you claim on your W-4 form, it will not change your actual tax liability when you go to file. So it's best to complete this form as accurately as possible. In the past, some people have advised students to mark exempt on their W-4 form, but this could be very costly when you go to file, as it will end up with no withholding being done during the calendar year, and you'll have to pay all taxes you owe when you file your taxes. Graduate level tuition and service fees may be waived as a benefit of employment. Along with employment wages, tuition and service fee waivers above $5,250 exemption are considered taxable income and subject to tax withholding. Only waivers with the tuition or service fee designation may be subject to withholding. There are three main groups of employees that could receive waivers: research assistants and teaching assistants, these are RAs and TAs; Graduate assistants and pre-professional graduate assistants, also known as GAs and PGAs, and employees who are eligible for tuition waiver benefits. RAs and TAs have an exemption from paying taxes on waivers. GAs and PGAs are required to pay taxes on their graduate level waivers. And employees who are eligible for tuition waiver benefits are also required to pay taxes on their graduate level waivers. More importantly, you may be asking yourself, does this affect me and my waivers? You are not affected by the taxability of graduate level tuition and service fee waivers if your only employment type is as a graduate research assistant or graduate teaching assistant. Your tuition and service fee waivers do not exceed $5,250 per calendar year. This relates to Internal Revenue Code 127. Your waivers are from a fellowship. Fellowships are not considered employment, so no withholding is done. However, you could have tax liability based on how your fellowship funds are used. When determining whether or not your tuition and service fee waivers will be subject to additional withholding, you need to identify what positions you have now and what positions you may have in the future. As a reminder, graduate assistants, and for those in Urbana, pre-professional graduate assistants, have taxable tuition and service fee waivers for any amount that exceeds $5,250 in a calendar year. Teaching assistants, research assistants, and fellows do not have taxable waivers. Internal Revenue Code 117D5 specifically excludes taxation on waivers for research assistants and teaching assistants. However, it's important to remember you will still have to pay taxes on your monthly stipends, so withholding will occur and be listed on your earnings statements. It's not uncommon for graduate students to have more than one type of appointment. So what if you have more than one type of employment with the university? The university bases taxation on your majority employment status. The university excludes taxation for research assistants and teaching assistants whose appointments equal 50% or more of their total employment with the university. University of Illinois Springfield does not allow graduate students to hold more than one type of appointment, so this really only applies to Urbana and Chicago students. It's easy to get confused when considering percent of total employment compared to the percent FTE or full-time employee appointment that you might have. If your only employment with the university is as a 50% research assistant, that is 100% of your total employment at the university. If you hold a 25% graduate assistantship and a 25% research assistantship, each appointment individually makes up 50% of your total employment. Both of them together is 100% of your total employment at the university. If you have 3 appointments, a 25% graduate assistantship, a 15% research assistantship, and a 15% teaching assistantship, all of them combined is 100% of your employment at the university. Let's say you have a graduate assistantship, but you also have a fellowship at the same time. If you happen to have a graduate assistantship and a fellowship, your fellowships are applied before the graduate assistantship waivers, so no withholding occurs on the waivers. Barring special circumstances like bonuses, special prizes, or awards, you will only see withholding occur on your stipend for this situation. Let's say you have a 25% appointment as a graduate assistantship and a 25% appointment as a research assistant. Would tuition and service fee waivers be subject to withholding in this situation? In a situation where you have either a 0.25 FTE or full-time employee research or teaching assistantship along with a 0.25 FTE graduate assistantship, your waivers would not be subject to withholding. So this person has 3 appointments, a 15% research assistantship, a 15% teaching assistantship, and a 20% graduate assistantship. Would you say this person's waivers would be taxable or not taxable? So the waivers are not taxable because the combined research assistant and teaching assistant positions are over 50% of total employment with the university. So if you've identified that you're going to see additional taxes taken out of your tuition and service fee waivers, you'll want to know when the additional withholding will occur. Taxes must be withheld in the same calendar year as the benefits are received. And as a result, the additional withholding for tuition and service fee waivers occurs in the same semester in which they are received. For the fall, the additional withholding occurs in October and November, with any adjustments done in December. For the spring, the additional withholding occurs in March and April, with any adjustments done in May. And adjustments could include additional withholding, for example. And over the summer, it occurs in July and August. It's important to recognize that since the tax year is based on the calendar year and there is a $5,250 annual tax exemption for the tuition and service fee waivers, some employees may not see any effect on your take-home pay until your third regular semester if you start in the fall and have lower tuition. If you've identified that you're going to need to pay taxes on your waivers this semester, you can contact University Payroll and Benefits Customer Service Team for help determining the impact on your pay. They can use the information you've already provided to give you a more accurate net pay calculation. If you're anticipating a change in your funding or you would like to calculate the potential impact yourself, we will go over a method for guesstimating the impact on your pay. In order to estimate the potential impact of your tuition and service fee waivers tax liability, you'll need to do some calculations. You'll want to total all taxable graduate level tuition and service fee waivers you've received year to date since January of this year. Subtract $5,250 of that annual exemption. Take the taxable amount left over and multiply by 0.28. Note that the 28% is an estimate. Your tax rate will be different since it depends on the way that you complete your W-4 form. University Payroll and Benefits will use the graduated rate of withholding based on your W-4 form. Take that amount and divide by the number of pay periods impacted. If you are paid monthly, that would be 2. If you're paid bi-weekly, that would be 4. Subtract the resulting amount from your regular anticipated gross pay along with any other deductions. And what's left over is the amount of your net pay during the months impacted by the additional withholding for taxable waivers, which is October and November for fall, March and April for spring, and July and August for summer, as we discussed earlier. In order to calculate the potential reduction in net pay, you will need your earnings statement, which is available on the system's HR services website, or your position offer letter so you can see what your gross pay is, your tuition and service fee waiver amounts from student self-service or your student portal. This may also be a good time to review your W-4 form for any changes that are needed. For example, if you had a child or got married since you last completed the form, you may want to review for updates to make sure withholding is done properly based on your individual tax situation. If you have multiple employers, you may want to update your W-4 form with each employer whenever your withholding needs changed. In your student account, you can look for the value of your tuition and service fee waivers under the View and Pay Accounts page. Sometimes there's a delay in the waivers being applied, so you can estimate by looking at the charges applied to your account for the affected semester, or consult the registrar's website for tuition and fee data for your university. You'll have to scroll down to see your account activity, which is where you can find charges and credits applied to your account. Amounts in the left column are charges and amounts in the right column are credits. The credits column will be where you can find the waivers. The only 2 waivers that the IRS considers as taxable income is the tuition waiver and service fee waiver. Your waivers may have slightly different descriptions, but you're looking for the ones that say tuition waiver and service fee waiver. Any other waivers that you see applied to your account will not be considered taxable income, so we won't need them for calculating the potential impact on your pay. We're going to go over a case study to help illustrate how to calculate the impact withholding can have on your take-home pay. For this case study, we have 50% graduate assistant with a 9-month appointment taking 12 credit hours in information science in Urbana starting in fall 2023. This student is being assessed out-of-state tuition rates. The tuition and service fee waivers total $13,835. After removing the $5,250 annual exemption, the taxable amount is $8,585. Using the 28% tax rate estimate, we'll multiply that amount by 0.28. The amount of taxes that are owed on this benefit is $2,403.80, which will be paid over 2 pay periods since the GAs are paid monthly. This will result in a reduction in take-home pay of $1,201.90 during October and November. So for the fall, this graduate assistant will have $2,300 in take-home pay for September, $1,100 for October and November, then $2,300 in December. Please note that the withholding calculations that we've estimated are based on a W-4 single or married filing separate with box 2C not checked. Since the tax year is based on the calendar year, the annual exemption of $5,250 for taxable waivers starts over in January. This means that taxability will look similar during the spring 2024 to fall 2023. This graduate assistant will receive about $2,300 in take-home pay for January, February, and May, with March and April take-home pay being about $1,100. So let's say that this graduate assistance program goes into the fall 2024 semester. Again, you'll total all taxable tuition and service fee waivers received year to date. So for spring and fall, which equals $27,670. Subtract out the $5,250 annual exemption, which leaves us with $22,420. Multiply that amount by 0.28 for the estimated tax rate, which makes the taxable amount for the year on this benefit $6,277.60. This graduate assistant already had withholding done in the spring for $2,403.80, so we'll also remove that from the taxable amount. What we are left with for fall is $3,873.80, which will be taken out of the October and November paychecks. This will result in an additional reduction in pay of $1,936.90. So I've included a table of take-home pay for the entire 9-month appointment during 2024 here, but let's focus on the fall 2024 net pay amounts. Assuming there aren't any changes to stipend rates for 0.5 FTE graduate assistantships with 9-month appointments in fall of 2024 and no updates are made to their W-4 form, take-home pay for this graduate assistant will be $2,316 in September, but drop to $379 in October and November. Then go back up to $2,316 in December. Because that $5,250 annual exemption was used in the spring, the impact on pay in the fall is much more significant. As a review, this graduate assistant received $13,835 in taxable benefits in the spring and $13,835 in the fall. So they received a total of $27,670 just in tuition and service fee benefits. But $5,250 of that was tax exempt. So they are paying taxes on an additional $22,420 of income for a year of graduate tuition and service fee waivers. So we've talked a lot about the taxability of tuition and service fee waivers for graduate assistants, but it's important to recognize the significant value that these waivers provide to employees. For our case study, our graduate assistant received $27,670 just in tuition and service fee waivers for 1 year of graduate school. Subtract out that $5,250 exemption, and the cost to our graduate assistant for 1 year of school was $6,278 for a benefit worth almost $28,000. In addition, our graduate assistant received a $2,400 stipend each month, plus the waivers that were not considered taxable income. The stipend was a gross benefit of over $22,000 for 9 months. The gross taxable income for both the taxable waivers and the stipend for our case study is almost $50,000. If you were to take out loans just for the taxable tuition and service fee waivers, your principal would be $27,670. Current interest rates for graduate direct loans provided by the U.S. Department of Education is 7.05%. If our case study graduate assistant paid back these loans over a standard 10-year repayment period, it would cost $38,638 total for 1 year of graduate school paid back over a 10-year period. And the monthly payment would be $322. Most likely, without a monthly stipend, you would need to borrow a significant amount more than that for 1 year of school, increasing the monthly payments and the opportunity costs for future financial decisions. So in preparing for potential withholding, you'll want to determine if your waivers are taxable. This is where your offer letter that identifies the type of graduate assistantship you hold is important. If you have more than one type of assistantship, it's important to understand how the university evaluates total employment for withholding purposes. Calculate potential impact on your take-home pay, as we illustrated with our case study, or by contacting university payroll and benefits. Assess anticipated monthly expenses. So this is very difficult to do prior to living a semester on campus, but it's important to look at your financial obligations that you know you will have. Identify resources to help mitigate the loss of income. There are a lot of resources outside of income that can help you cover expenses that may be difficult to account for. You can check the Student Money Management Center's website for a list of university-specific and community resources that may be helpful to you. Create a savings goal that can help cover anticipated costs. After taking a look at your anticipated expenses and considering what resources you have access to that can cut some of those expenses, you may want to create a savings goal to help you cover the anticipated reduction in take-home pay. And finally, you can create a budget that includes those saving goals. There are many ways to do this, but the important thing is that you track your expenses so you can identify any gaps in your plan. There are several places to get help navigating this situation. University Payroll and Benefits oversees all withholding processes for employees. So if there are problems with your paycheck or withholding, you can visit their office, email, or call them to get answers. They can also calculate the impact on your take-home pay if you contact them directly. The Student Money Management Center offers resources for budgeting, student loans, and other personal finance topics, including a referral program to University of Illinois Extension's Money Mentors for individual financial coaching appointments. We hope this helps you navigate the potential loss of income from taxable tuition waivers.